Pop goes the Bitcoin price. A 20% slide on Tuesday dragged the flagship cryptocurrency to a 6-week low below $12,000 US, as concerns grew about a global crackdown on pseudomoney. Other prominent forms of virtual cash also took it on the chin. Ripple, a system intended to help speed foreign exchange transactions, slid more than 25%, while Ethereum, a platform for building decentralized applications, declined more than 17%. Is this the end of the crypto boom? Probably not. Too many people are still full of high hopes about new forms of computer-generated money despite Bitcoin's nearly 40% slide over the past couple of months. But investors are wising up to some of the practical difficulties that go along with attempting to overturn the world's existing monetary order. Story continues below advertisement. The single biggest challenge is the threat of government bans on cryptos. By and large, market regulators chose to ignore the early rise of cryptocurrencies on the theory that the new virtual cash represented only a small patch of the global economy, populated by enthusiasts who knew the risks. But as cryptos have taken off, surging prices have lured inexperienced investors and highlighted concerns about the possible use of digital tokens for tax evasion and other crimes. Regulators are taking note. China, home to most of the world's Bitcoin producers and miners, has moved over the past few months to hobble Bitcoin exchanges, ban initial coin offerings of new digital tokens and deter crypto miners operating within the country. The latest sell-off in Bitcoin prices followed a Bloomberg story that reported Beijing was considering an even wider assault that would target cryptocurrency trading through online platforms and mobile apps. South Korea, home of much of the world's crypto trading, is mulling a shutdown of virtual currency exchanges, according to local reports. Meanwhile, France has appointed a well-known Bitcoin skeptic to head a task force about cryptocurrency regulation. Crypto enthusiasts are sure to complain about government intervention. However, the boosters suffer from a self-inflicted wound. The sheer number of new cryptos that are being launched by everyone from large US corporations to isolated nerds in developing countries. More than 1,300 digital currencies are now on the market, including ones designed to pay dentists. Dentacoin, support Donald Trump, Trumpcoin, and satirize the whole cryptocurrency concept. Dogecoin. 33 of these virtual monies have market capitalizations of more than $1 billion, according to the website liveswarewatch.com. It estimates the total value of all cryptos at more than $500 billion. The proliferation of alternatives blows a hole in the notion that cryptocurrencies are attractive because of their scarcity. Lovers of Bitcoin, in particular, have long argued that it's immune to the inflationary whims of central banks because its supply is limited by the system's algorithm. That may be so, but the potential supply of new cryptos of all kinds is unlimited. It's possible that the flood of new cryptocurrencies will combine with the threat of government regulation to smash the crypto craze, beginning with its best-known representative. If Bitcoin isn't mined because of the crackdown in China, transactions aren't approved and new Bitcoins aren't produced, which could grind the whole system to a halt, says Kerry Walsh of Capital Economics. However, even a full-on cryptocurrency collapse would be unlikely to spark any wide economic distress, since much of the apparent wealth is a mirage. It reflects vast amounts of crypto held by the developers of each system and never traded. Even in the case of Bitcoin, the linkage to the broader financial system is tenuous. Story continues below advertisement. What isn't so tenuous are the high hopes built up around the notion of virtual currencies. That may be enough to overcome the recent setbacks. After all, cryptocurrencies have survived other calamities, notably the collapse in 2014 of Mt. Gox, one of the world's biggest Bitcoin exchanges. Crypto enthusiasts may learn from the current challenges and tweak their systems, by making them more transparent to government regulators and more practical in their internal workings. For instance, one interesting idea is the notion of moving away from proof-of-work systems that require would-be miners to expend vast amounts of computing power and electricity on solving complicated but useless math problems. Instead, cryptos may move to proof-of-stake systems that would reward long-time holders of a cryptocurrency with the right to mine new coins at minimal cost. Such ideas hold promise. Still to be determined is whether investors really want to trust currencies that keep tweaking their internal workings. Stay tuned.